What's up everyone, it's Karthik with MoneyVest, and in today's video we are going to be talking about Lululemon. A lot of you guys have been asking for analysis on this company and an update on this stock as it continues to sell off quite aggressively. So we're going to use our MoneyVest platform to look at the stock, look at the company, and I'm also going to break down why exactly it is selling off, because it's now trading down to very, very low valuations. But as I mentioned before, just because a stock is cheap does not make it a buy. Just because the stock is overvalued does not make it a sell. So that is something that we have to understand and of course discuss in this video. So first things first, I want to give a shout out to Ferdinand Diaz for this comment. He posted this about a few minutes ago saying, "Caddy, you have showed me how to make passive income with puts and calls. Together with your new platform to analyze intrinsic values, I am now able to make good money every single month. I cannot thank you enough." So again, thank you so much for this comment, Fernand. And again, I want to emphasize that we've got our own MoneyVest platform, which is exactly what we're going to be using to analyze Lululemon. As you can see that it's now trading down to $252. We're going to take a look at the entire fundamentals here. So it's available with a 51% discount until the end of this month. And also that gives you access to our members only private videos, which also includes my 37 stocks and ETF shopping list, which includes all of my buy targets. That's also available with the link down below. So first things first, let's talk about Lululemon's leggings. And again, this is one of their best product, and it's kind of crazy like what we have to analyze when we are analyzing stocks, because sometimes you have to look at some of these things as well, because they can actually be catalysts for a stock to sell off. So Lululemon stops sales of a new breeze-through leggings after customers complained of a whale tail fit. Now, I'm not really sure exactly what a whale tail fit actually looks like, but this right here is the reason why it is, actually I should say one of the reasons why it's selling off. So Lululemon pauses sales of a breeze-through, which was supposed to be the new launch of the leggings for most of the women over in the US. Of course, that's their primary consumer, and consumers essentially said that the line is quote-unquote unflattering. And this right here, again, is the paused sales of the company's newly launched Breeze-Through collection as a significant quote-unquote execution concern. And the Breeze-Through line was expected to drive growth in Lululemon's women's leggings category through the second half of 2024. But because of this execution concern, we are now seeing significant coverage on Lululemon as a lot of analysts continue to downgrade the stock, with the Trust Securities maintaining a buy rating and lowering its price target from $415 down to $310. TD Cowen analyst John Kernan maintaining Lululemon with a buy, but lowered the price target from $447 down to $420. And Jefferies reiterated the underperform rating and $220 price target on the stock. So significant amount of downside expected by these analysts, and two more, Citi and JP Morgan, both coming out with some price cuts and downgrades as well. But this right here is a picture I was able to find. And again, I do apologize. I don't want to get too graphic here, but this is what it is. We have to analyze this sometimes. This person said on Twitter, "I spoke with the store rep today and learned that the breeze-through leggings are one of the worst selling new items. The fabric is good. The design flaw is in the back seam that makes the butt look completely asymmetrical." And that's the pick for reference. And again, it's kind of crazy what we have to analyze sometimes. But Lululemon is, in fact, of course, in this business where they do sell leggings, which are the primary driver for their growth and for their revenue. But apparently there's like a Y shape in the back for this design, which again, the intention was not for it to look what it actually looks like. So those are some things to consider. Again, I don't want to get into too much detail. I'm sure the women can explain much better, but that's kind of like the design flaw, and of course is really resulting in a bit of an execution flaw for Lululemon as well. Now this right here is BTIG, and this is Managing Director Janine Stitcher says, and I quote, that Lululemon is getting in their own way. She just lowered her price target to $316, but says the stock is still a consistent growth story. And I watched the entire 3-minute clip. And she essentially says that Lululemon is getting in their own way, basically with the execution problems, trying out new things and not really focusing on what's already worked for the company and what's really resulted in, of course, such a significant amount of growth over the years. And they're now trying out new things, of course, is a result of a very rare miss from the company in terms of its execution. So they need to go back to the drawing board and, of course, figure something out fairly quickly, take all the feedback that they can gather from the guest, and then work something out to launch or relaunch, I should say, something once again so that can drive the growth in the second half of 2024. So this right here were some of the cuts from Citi and JP Morgan, removing from the focus list. And this right here is a double hit, which has raised concerns about the company's growth prospects. And that's amid a challenging retail environment. And analysts at Citi lowered Lululemon's rating from buy to neutral, slashing the price target from $415 down to $300. And they cited a category slowdown in active apparel as a major factor, noting that Citi's credit card data indicated a further deceleration in the second quarter compared to Q1, which was already a significant drop from fiscal year 23. Now, if you've got experience with the product itself, let me know in the comment section. Let us know in the comments what you've experienced. If there's any type of significant design flaw, which is really resulting in the lackluster demand, which is exactly one of the reasons why there's been significant amount of price cuts on this company. And the bank also believes additionally the lackluster product assortment, the lack of color sizing has made it more vulnerable to increased competition and promotional pressures in the latter half of fiscal year 24 and in fiscal year 25 as well. So they do see a significant amount of category weakness, more specifically geared towards women's apparel, and a tougher macro backdrop, making it unlikely that Lulu sees a reacceleration in US in the second half. While Lulu has performed extremely well in China over the several years, incremental weakening of Chinese consumer environment and the added risk to the stock is definitely some of the reasons why they're cutting their price target down to $330 from $457. That's a big price cut for Lululemon. Now, there's also been concerns over the company's CPO, so Chief Product Officer, Sun Ko, essentially leaving the company. So there's been a departure of Sun Ko, the Chief Product Officer, who's been with the company for over 7 years, also has led to a lot of growth for the company, made a lot of really important decisions and led the company to where it is now. But CEO Calvin McDonald essentially says that we are grateful for Sun's many contributions to the company over the past 7 years, and she leaves us as a stronger product-led organization with the dynamic leaders ready to take us forward as well. So really the bottom line for this company is a bit of an execution problem here in the short term, which again is a bit rare for a company like Lululemon. I mean, it's been one of the most popular brands over in the US. They've got hundreds of stores. They've got a couple in Dubai. I don't think they've got any in India, but overall, maybe they do. I think they have a couple in India. But the bottom line is that they are a very strong, popular brand for apparel, more specifically geared towards women in the world. And right now, they're kind of facing a lot of short-term executional risk because the competition's heating up. We're getting, of course, double, triple downgrades with significant price cuts on the company. So the real question is, how quickly can they bounce back from this concern over the breeze through collection being paused and the company going back, because they did waste a lot of capital in creating a lot of products. Inventory buildup is definitely going to be much higher because nobody's going to be buying these leggings after the reviews that have come out. So there's definitely a huge expense associated with that. There's a huge headache or stress related to the relaunch or the execution that they need to fix moving forward. So there's definitely a short-term weakness, vulnerability for Lululemon. But this right here is the 5-year plan that they're still on, supposedly, from 2026. They're expecting revenues to more than double from back when they announced this plan in 2021. A 5-year plan to get revenues to over $12.5 billion. So if you come over to our MoneyVest platform, this is actually one of the highest rated stocks on our platform at 4.3 out of 5 for the M score. Rightly so, because the growth has been very strong. So if you come over to the last 10 years, Lululemon has grown revenues at over 19%. This right here has been the entire revenue growth for the company. As you can see how consistent it has been. I mean, they were just shy of $10 billion in 2024. And 2025, again, the expectations are for a bit of a growth. So if you come over to analyst estimates, come down a little bit, you'll notice the revenue expectations are just under $11 billion. That's a 13% growth on a year-over-year basis. And then by 2026, just shy of $12 billion. They're targeting 12.5. So again, we'll find out if they're able to hit that target, but that's going to be a high single-digit revenue growth of just over 9.5%. So if you come back over to some of the MoneyVest metrics here over the last 10 years, Revenue growth, like I said, has been over 19%. Very good. Gross profit, operating income, net income, and free cash flow, everything moving in the right direction, as you can see. It's been very consistent. Gross profit also, that's in yellow, very nice, to over 5.6 billion. That's grown from about 914 million. Operating income also moving in the right direction. Then you've got the net income and, of course, free cash flow, everything well over 1.6 billion dollars for this company as well. In terms of margins, we've seen expansion or rapid expansion across the board. So scores a 4.4 out of 5 in terms of growth, 4.3 out of 5 in terms of profitability. So you can see the margins for the company have also remained very stable. In fact, gross profit margins have increased from 48% to, as of last year, now sitting at 58%. So there's been some margin expansion as well. And then, of course, the bottom line, free cash flow margins, net margins have also accelerated to well over 17 to as much as 20% for the company. One more thing I want to mention is the shares outstanding has been going down. So last 10 years, they have consistently bought back shares. So it's gone from 144 million down to about 127 million. So that, again, is very solid for the company. That's exactly what we want to see, is shares buyback. And this right here is going to be efficiency. So it scores a 4 out of 5. So return on assets at over 21%, return on equity, return on invested capital, and return on capital employed. Everything is, again, pretty good at well over 20 to as much as 35 to as much as 40% for the company. So incredibly efficient as well. And then finally, if you come over to the balance sheet, scores just under 4 out of 5. Looks like the company has plenty of cash with little to no debt, so negative net debt. We can also take a look at that in the fundamental analysis, and you can also come down here, switch this from annual to quarterly, and let's just go back to the last 8 quarters and take a look at the company's balance sheet here, come down to total cash, and then also look at long-term investments, which the company doesn't really have, but then scroll down, long-term debt is not really there, current portion of long-term debt is not there, short-term debt is not really there, so the company literally does not have any liabilities. Of course, it has liabilities of 2.6 billion, but cash is at just over 1.9 billion. So they do have almost as much as cash as total liabilities. And then if I plot for, let's say, the long-term leases, so other non-current liabilities, we're sitting at $1.2 billion. So again, more cash than the other non-current liabilities, or $1.2 billion. These could be long-term leases, deferred taxes, things like that. But the bottom line is, again, a very, very strong balance sheet with little to no cash, little to no debt and plenty of cash on the balance sheet. And finally, if you come over to the valuation, we are looking at very, very cheap valuations here. Of course, it was trading at much higher levels back in the day when it was trading at well over, I believe, at well over $500. Since then, it has obviously dropped over 50% from its all-time highs, just over 51%. And back then, it was trading at valuations well in the 60s to 70s, and it has now come down to just over 20. So this right here is the significant decline since 2021. Same goes true for price to sales and price to free cash flow as well. So this right here are going to be some of the numbers. As you can see, they have consistently come down for the company as well. So here we have a company that has consistently grown revenues. Margins have expanded. Share buyback is very strong. Balance sheet is excellent. Efficiency is good. Valuation is cheap. But the only reason it's selling off is because of the short-term execution risk. And as a result, Wall Street turning really bearish on the company with a low target of 222, high target still at 551, average target at $400 with a buy rating on the stock still. And this right here is going to be the earnings expectations growth of 14 to 15% over the next 5 to 7 years, with revenue expected to grow in the 11% range for the next 5 to 7 years as well. So it's kind of hard to judge. I think it's going to take some time to really understand what exactly is going to be the game plan or the strategy for Lululemon moving forward, and how quickly do they bounce back from this execution risk. So that is something that we need to kind of wait and see from the management in terms of its the breeze through launch. And then, of course, if you come take a look at the numbers here, 17.4 times forward multiple, which is extremely low for Lululemon. And then we're looking at a price to sales on a forward basis at just under 3, and price to cash flow at just a little bit over 18 for the company, which also is extremely cheap. So this is a company that is trading at cheap valuations. If you do believe that this is a short-term execution concern, which Lululemon is going to bounce back off of fairly quickly, then Lululemon is or could be an easy buy for you, right? So again, that's something that you have to analyze and assess for the company. So if you look at the 5-year expectations for Lululemon, and we're looking at a growth rate of, let's say, 14%, and a P multiple of 20, which is just a slight expansion from where it's trading at the moment. Again, 1% share buybacks, 12% discount rate, 10% margin of safety. If you hit calculate, Lululemon ends up being undervalued by 6%. And the crazy thing is that this is actually quite a conservative expectation for Lululemon at only a 14% growth rate and a 20 times PE multiple. So if you come down, this is going to be that matrix or that sensitivity grid, and take a look at how, if the growth rates change, how the PE multiples change, the fair values would also change, and that would make the stock even more undervalued. For example, if I go up to as much as 16% growth rate and a multiple which is more consistent from its historical averages at closer to, let's say, 25, now we're looking at a company that is going to be significantly undervalued by almost 45%, with a fair value sitting at $365 for the company. But let's just go back to the previous assumptions. 20 times PE multiple, 14% growth rate, and that puts us at 268 being the intrinsic value, with a price target for Lululemon back to all-time highs of well over $524 per share. But I think it's really important for us to wait and see what ends up happening with the management and what is going to be the strategy moving forward. We do have a reasonable support, I guess, over here at 244, 245. In other words, there is a very strong area of resistance as well as a support exactly where it's trading at the moment. So if you come over to the weekly time frame, you'll notice that it is incredibly oversold. The L3 banker oscillator just coming down aggressively. There's been massive selling pressure from the whales. We got a previous pre-COVID resistance here, which turned into a support multiple times, and right now we're once again trading at these levels. In case we get a breakdown below 240s, which I doubt is going to happen, I do believe the selling pressure could get exhausted here fairly quickly, because it does seem to be pretty much overdone from its all-time highs, down over 50%, trading at really cheap valuations. So it does seem pretty overdone here at these levels. But in case it does, technically speaking, the next support is going to be down to as low as $165, but I don't expect Lululemon to be trading anywhere near close to that level. And at that level, almost down 70%, despite all the execution concerns, I will be very interested in buying that stock at those prices. So let me know your thoughts down in the comment section below. I don't mind trading Lululemon right now, but from a fundamental investment standpoint, I think I just need to wait and see how the management kind of comes out of this and how quickly the company bounces back from the execution error that we witnessed. And that's when a lot of investors and analysts are going to start turning bullish into the company once again. So link's going to be down below if you want to join. Of course, do your own analysis on this company. We've got a 51% discount available until the end of this month. And make sure that you drop a like, subscribe to the channel. Hope you all enjoyed it. It's always happy investing. I'll see you all in the next video.